Yeah, I wouldn't blame anyone being surprised because we've been writing about Bitcoin since 2017 when it was under 1,000, and at that time we posited that institutional investors would want to own Bitcoin because of its status as digital gold, and today that's really the mainstream narrative. But this year, myself and Mosaics, who helped me engineer this BitMine transformation, we started to see the possibility that Ethereum was entering a super cycle, something that would last 10 to 15 years. And
You know, it's easy to forget just how far Bitcoin has come. Back in 2017, when Bitcoin was trading below $1,000, many people thought it was just a passing trend, an experiment that would eventually fade away. But even then, some early analysts saw the potential for something bigger. They believed that institutional investors, the big players like hedge funds, banks, and asset managers, would eventually want exposure to Bitcoin. Why? Because Bitcoin represented something the financial world had never seen before, a form of digital gold. Fast forward to today, and that idea has become mainstream. Major financial institutions like BlackRock, Fidelity, and JP Morgan are now talking openly about Bitcoin as a store of value and even offering Bitcoin-related products to their clients. What was once a fringe idea has now become part of traditional finance. But while Bitcoin continues to dominate the headlines, some analysts are now turning their attention toward Ethereum. This year, experts like Tom Lee from Fundstrat and the Mosaic team have suggested that Ethereum might be entering what they call a super cycle, a long-term growth phase that could last 10 to 15 years. So what exactly does that mean? A super cycle is when a major asset doesn't just rise because of hype or short-term demand. It grows due to deep structural changes. For Ethereum, that could include its move to proof of stake, the rise of decentralized finance, tokenization of real-world assets, and the explosion of new applications built on its network. In other words, while Bitcoin continues to establish itself as digital gold, Ethereum could become the backbone of the next generation of the internet, the digital economy itself. If this prediction turns out to be right, then we might be witnessing the early stages of a massive transformation in the world of crypto. Let's continue to listen to what Tom has for us.
so Michael Saylor is a very good friend of mine. In fact, I spent a lot of time explaining to him and thinking around Ethereum and Bitcoin, and I think we agree Bitcoin and Ethereum, first of all, are friends. We don't compete, but that our strategy is very different. I'm not competing. BitMine is not trying to get an institution to buy us over MicroStrategy. In fact, we think an institution that owns MicroStrategy also has to own BitMine because we are different parts of the crypto economy. Ethereum, to me, is the new Wall Street. In 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. It no longer was backed by anything. And that's when Wall Street stepped in and said, okay, we got to make sure that the euro, the German franc or whatever, German mark or the French franc doesn't become dominant. So Wall Street built products to make sure everyone used a synthetic dollar. Wall Street was the big play in 1971. In 2025, we're making everything synthetic. We're starting with tokenizing the dollar. And then, as you know, Wall Street's going to tokenize equities and everything I just listed. Massive opportunity.
Now, this next part is fascinating. Michael Saylor, the CEO of MicroStrategy, is well known as one of Bitcoin's loudest advocates. But what many people don't realize is that even he has close friends and colleagues who see the potential in Ethereum. In fact, this speaker explains that he spent a lot of time discussing both Bitcoin and Ethereum with Saylor, and they actually agree on something important. These two assets aren't enemies. They're not in competition. Think of it this way. Bitcoin and Ethereum are friends with different missions. Bitcoin is sound money. It's the digital version of gold, a hedge against inflation and a store of value. Ethereum, on the other hand, is like the new Wall Street, a platform where financial innovation happens. Tom makes an interesting comparison to the year 1971, the year the US dollar went off the gold standard. Back then, people thought gold would be the main play, but the real winners were the institutions on Wall Street that built financial products to keep the US dollar dominant. They created a whole synthetic financial system, derivatives, bonds, and global markets, all built around the dollar. Fast forward to 2025, and we're seeing history repeat itself, but this time in the crypto world. Ethereum is becoming the foundation for a new financial system, one where everything is being tokenized. It starts with the dollar, stablecoins like USDC and UTST, but it won't stop there. Soon, we'll see stocks, real estate, and even commodities like gold represented as tokens on the blockchain. That's the massive opportunity he's talking about. Bitcoin secures value, Ethereum moves value, and together, they're building the next financial revolution, a synthetic, tokenized economy that could reshape how the entire world interacts with money. Let's continue to listen to what Tom has for us.
In our view, Ethereum probably is a chain that had become underestimated. It made its all-time high 5 years ago. So when we started the treasury strategy, Ethereum was around 1,300 and its all-time high was around 4,800. But that was a case in our minds where Ethereum's fundamental story was much stronger because number one, it is the second largest blockchain. It's the largest smart contract platform. It has a huge community of developers that, in my opinion, are really benevolent focused. Ethereum is trying to improve the world, but I think people thought of it as less exciting than other platforms. But then along comes not only stablecoins, which we call the ChatGPT moment for crypto, but it's really the realization that this current administration in the U.S., the White House and Congress are really becoming pro-crypto, and Wall Street itself is embracing blockchains. And the blockchain they're doing most of the work on is Ethereum. So when I look at that combined with AI and tokenized agentic AI and robots are really going to create the need for a token economy for robots. A lot of that will happen on Ethereum.
When we take a closer look at Ethereum today, it's clear that this blockchain might actually be one of the most undervalued assets in the entire crypto market. Think about it. Ethereum last reached its all-time high nearly 5 years ago, trading around $4,800. When this new treasury strategy began, Ethereum was sitting near $1,300, far below that peak. But the fundamentals of Ethereum have only gotten stronger since then. It remains the second largest blockchain in the world, right behind Bitcoin. But unlike Bitcoin, Ethereum isn't just a store of value, it's a full ecosystem. It's the largest smart contract platform, powering thousands of decentralized apps, financial systems, and digital innovations. And behind all of that is a massive community of developers, builders who are deeply mission-driven, focused on improving the world, not just chasing profit. Yet for a while, Ethereum started to feel less exciting. The hype moved toward other chains promising faster transactions or lower fees. But then something changed, a wave of adoption that no one could ignore. It started with stablecoins. These digital versions of the US dollar became what many call the ChatGPT moment for crypto, a tipping point where the world suddenly realized how useful blockchain could be. Billions of dollars now move through Ethereum every day via stablecoins like USDC and USTD, used by businesses, institutions, and everyday people. At the same time, something remarkable began happening in the United States. The current administration, including both the White House and Congress, started showing more pro-crypto signals, opening the door for regulation that actually supports blockchain growth instead of fighting it. And then there's Wall Street. Traditional finance isn't running away from blockchain, it's building on it. And the blockchain that most major institutions are choosing is Ethereum. From JP Morgan's Onyx network to tokenized funds from BlackRock, Ethereum is becoming the financial layer of the digital economy. Now, combine that with artificial intelligence, tokenized AI agents, robotic automation, and machine-to-machine payments, and the picture becomes even clearer. These future technologies will need a token economy to operate, and a large part of that economy will live on Ethereum. So while the market may have underestimated Ethereum for years, the foundations are being quietly built for its next big moment, one that could define the next decade of digital finance. So when you step back and look at the bigger picture, both Bitcoin and Ethereum are shaping the foundation of a brand new financial era. Bitcoin stands as digital gold, the ultimate store of value, while Ethereum is building the digital economy around it. Together, they're not competitors, they're partners in a global transformation that's only just beginning. And as institutional adoption, tokenization, and I continue to grow, it's becoming clear that the next decade belongs to crypto. If you enjoyed this breakdown and want to stay ahead of the next big moves in crypto, make sure to subscribe and turn on notifications. There's a lot more coming your way.